Welcome back to Investing Talk Podcast. Navigating the often complex world of biotech investments can sometimes feel like trying to find your way through a really dense fog, especially when you're looking at these smaller clinical stage companies. How do you actually cut through all the scientific jargon, the intricate financials, and just the market chatter to find some clarity? Today, we're doing exactly that. We're taking a deep dive into XRTX Therapeutics. We'll unpack what this company does, take a look at its financial health, examine the competitive landscape it's operating in, and analyze some pretty crucial recent developments. Our mission for this deep dive is really to help you understand its unique investment profile, separating that potential from the, let's face it, inherent risks. But before we jump in, if you're finding value in these deep dives, maybe getting those aha moments, please remember to subscribe, like, and leave a comment. Your support genuinely helps us bring more of these analyses to you. And if you'd like to support us even further, maybe consider buying us a coffee. The link's usually down below. Okay, let's get into this company.
To kick things off, what exactly is XORTX Therapeutics, and what's their core focus in the pharmaceutical world?
Okay, so XRTX Therapeutics is a late-stage clinical pharmaceutical company. They're based in Calgary, up in Canada. Their main focus, their core area, is developing and commercializing therapies, specifically for gout and progressive kidney disease.
Gout and kidney disease, okay.
Yes, it's a very targeted approach within nephrology.
That's a pretty significant medical area. Can you maybe walk us through their main programs, what's actually in the pipeline right now?
They actually have quite a diversified pipeline for a company their size. It's pretty active. Their lead candidate, the one furthest along, is called XRX026. It's currently in phase 3 for gout. And importantly, it's at what's called a pre-NDA filing stage.
Pre-NDA, okay.
Which is a really critical point for any biotech. It signals they're getting close to potentially submitting to regulatory bodies like the FDA.
Right, that's a big step. What else?
Beyond that, they have XRX008. This one's in phase 2 for autosomal dominant polycystic kidney disease, or ADPKDD.
ADPKD, I've heard of that. Genetic, right, cysts on the kidneys.
That's the one. It's a genetic disorder, cysts grow in the kidneys, and it often leads to kidney failure down the line. Then there's XRX101, also in phase 2. This targets acute kidney injury, specifically associated with respiratory virus infections.
Ah, that sounds like something that probably got more attention recently.
It certainly did, particularly relevant during the pandemic. And finally, they have XRX225. This one's still preclinical. It's aimed at type 2 diabetic nephropathy, so quite a range from very early to very late stage.
That is quite a spread of programs. You know, it's interesting hearing about a company with that kind of pipeline depth. What might surprise some listeners, though, is the size of the team actually working on all this. How big is XRRTX?
Yeah, that's interesting. They operate with a very, very lean team. Only 3 employees.
Just three people.
Just 3. Now, that might sound tiny, maybe raise an eyebrow for some people.
It does a bit, yeah.
But for an early stage clinical biotech, it's actually quite typical. This kind of lean structure usually means they're outsourcing a significant chunk of the really expensive work.
Ah, okay. Like the clinical trial.
Exactly. Clinical work, regulatory affairs, maybe even a lot of the research itself. This can be quite capital efficient. It lets them stretch their funding further.
Makes sense. But there must be downsides, too.
Oh, absolutely. The flip side is a heightened dependence on those few key people. And of course, on how effective those external partnerships are. It definitely adds a unique layer of operational risk. XORTX's success really hinges on the vision of that small core group and, well, how well those outsourced bits work out.
Okay, so that gives us a clear picture of their pipeline and how they're set up operationally. Let's pivot now to the financials. Because for a company like XRTX, the numbers, they often tell a very different story compared to, say, established commercial businesses. What should we know about their revenue and earnings, especially given they're still in that clinical stage?
Right. And as you'd expect for a clinical stage biotech, XORTX has historically reported minimal revenue, often none at all. For instance, in Q1 2025, their revenue was effectively $0.
Zero?
Which is completely consistent with the sector. Their focus isn't sales yet. It's all about pouring resources into R&D to hopefully bring a drug to market someday. This heavy R&D spending means their free cash flow stays negative. Also standard, they're spending heavily on trials, development, all that.
And things like return on equity.
Also negative, which again is common among their peers who don't have approved products yet. It's simply because they're consistently reporting net losses as they invest, not generating profit.
So those numbers really hammer home the R&D heavy nature of this kind of business. What really jumped out at me, though, looking through the figures, was the significant volatility in their earnings per share, the EPS. You see Q1 2025 EPS at minus 0.576 cents, which was actually an improvement from some prior periods. But then you see these really sharp swings, like a positive surprise of over 5 cents in Q2 2024, and this really atypical positive result of $1.36 back in Q4 2023. What drives those kinds of extreme swings for a small company like this? What should investors make of that volatility?
That EPS volatility is high, you're right. And it's often driven by factors typical for these microcap biotechs. It frequently reflects the timing of large, often non-recurring financial events. Maybe a big R&D payment hits the books, or perhaps they recognize certain grants or accounting adjustments happen. These things can dramatically swing the results for a company with basically no revenue base. It's less about steady operational earnings and much more about these specific financial moments.
So trying to use traditional metrics is tricky then.
Exactly. Because of these ongoing net losses, traditional metrics like the price-earnings ratio, the PE ratio, they're just not meaningful for XORTX at this stage.
Right.
It's not a metric you'd apply. Investors aren't looking at PE. They're looking at the pipeline progress, the clinical data, and, critically, the cash runway. How long can they keep operating? However, there is a notable financial strength, relatively speaking. Historically, XORTX has operated with low debt compared to its equity. Recent filings show approximately 0% debt to equity.
0%, that's quite low.
It is. It gives them some financial flexibility, despite the losses. It means they haven't leveraged themselves heavily, which is really important when you constantly need to raise fresh capital.
That's a really good point about flexibility. So given these sort of typical biotech financials, the negative revenue, the negative cash flow, how does a company like XORTX actually manage its burn rate? What's the typical runway look like, and what specific financial sign or milestones should investors be watching for instead of revenue or earnings?
That's the crucial question, isn't it? For any clinical stage biotech, managing that burn rate, how quickly they spend cash, is absolutely paramount. Companies like XRTX typically rely on a mix of things. Strategic private placements like the one they just did we can talk about, or maybe public offerings to fund operations. Their runway, how long they can last, depends entirely on their current cash balance versus how much they spend each month.
So investors shouldn't expect profit anytime soon.
No, definitely not. Investors should not be looking for profitability or positive cash flow in the near term. Instead, the financial milestones that truly matter are things like successful clinical trial results, positive interactions with regulators like the FDA, and of course, successfully securing new funding rounds when needed. Those are the events that can really unlock significant shifts in valuation and ensure the company can actually continue its development work.
Okay, that makes sense. Let's move beyond the balance sheet then and look at XRTX's strategic position in the market. What would you say are their key competitive advantages? And on the other side, what are the big challenges they face in this pretty specialized area?
Well, XORTX does have several strengths. First, they possess a focused intellectual property portfolio. It specifically targets uric acid metabolism disorders. And this includes a recently granted European patent for something called xanthine oxidase inhibitor formulations.
Xanthine oxidase inhibitors, those are common in gout treatments, aren't they? Like allopurinol.
Exactly. They reduce the body's production of uric acid. This patent protects XORTX's specific way of formulating these inhibitors that could give them a competitive edge in how the drug is delivered or its effectiveness.
Okay, so strong IP. What else?
Another big one is advancing their lead candidate, XRX026, into that late-stage pre-NDA phase we mentioned. In biotech, we often call this a critical value inflection point.
Value inflection point.
Right.
What does that mean for investors practically?
Practically, it means the company's valuation could change dramatically based on crossing this threshold successfully. It's the point where years of R&D spending might get validated by positive regulatory progress, potentially opening the door to huge revenues. Or, conversely, they could face major setbacks if approval doesn't look likely.
High stakes.
Very high stakes.
Yeah.
They also have that diversified pipeline we talked about earlier, targeting multiple conditions in nephrology and gout. That spreads their risk a bit, so they're not totally reliant on just one drug succeeding.
Right, diversification helps. So with those advantages, how does XORTX actually fit into the bigger picture, the broader industry? Who are their main competitors, especially since they don't have approved products yet?
Good question. Given they don't have approved products generating revenue, you'd position XORTX as more of a laggard or maybe a challenger in the current market. They're definitely not a leader yet.
Okay.
If you compare them to the established players in gout and kidney disease, well, you've got companies like Horizon Therapeutics. They have commercialized gout treatments. Horizon was actually acquired by Amgen for a massive $28 billion.
Wow, 28 billion. Okay.
Yeah. And then there's Otsuka Holdings. They're a large cap company. And they have commercialized treatments for AD, peak AD, one of XORTX's targets.
Are big players already in the field?
Very big players. Now, while XRTX is pre-revenue, it could potentially carve out a niche for itself if its drug candidates are successful in the clinic, but it will absolutely be an uphill battle against these large, well-funded, established companies. And we need to talk about the significant red flags and risks, too. These are really important.
Definitely. Let's hear them.
Okay, first, no current revenue stream means they are completely dependent on successful drug development and getting future approvals. Everything rides on the science working out and regulators agreeing. Second, it's microcap size. Being a very small company by market value inherently increases its risk profile.
How so? What does that mean practically?
Practically, it often means higher stock price volatility, less attention from big analysts, and a greater susceptibility to dilution.
Dilution meaning existing shareholders own less.
Exactly. When the company needs to raise more money by issuing new shares, existing shareholders' ownership percentage gets smaller. Microcaps often have to do this more frequently. There's also just a very high dependency on successful clinical trial outcomes and being able to secure funding when they need it. Those funding cycles are critical. The ongoing net losses also raise what accountants call going concern risks. Basically, questions about whether they can continue operating until they reach commercialization.
It sounds serious.
It is a standard risk disclosure for many biotechs, but it's real. And finally, even if they do get approval, the competition from those larger players already marketing similar therapies poses huge commercialization challenges. Getting a drug approved is only half the battle. Selling it is the other half.
Okay, those are some significant hurdles. Given those red flags and challenges, what do you see as the single biggest hurdle for XORTX to overcome in the near term? And what could they possibly do to mitigate that?
I think the single most challenging hurdle, without a doubt, is getting that successful regulatory approval and then figuring out the commercial launch for XRX026, their lead program. Everything really hinges on that one.
Makes sense. And mitigation.
Mitigation strategies really revolve around meticulous planning. Super careful clinical trial designed to meet the FDA's requirements, maintaining that lean operational structure to conserve cash for as long as possible, and strategically engaging with potential partners, maybe for co-development, maybe for commercialization help. A partner could offload some of the financial burden and provide access to a much larger sales force. But essentially, they're walking a very fine line. Any significant deviation, any major setback could be really damaging.
It sounds incredibly high pressure. So, bringing it all together, what does this mean for the immediate future? What's the latest news impacting XRPX right now, and what should we be watching for as potential catalysts, potential big moments?
Okay, some recent developments are quite important here. First, XORTX recently announced a private placement. On June 26, 2025, they raised about USD $925,000.
Okay, almost $1 million. What's that for?
The funding is specifically earmarked for their gout treatment programs, so likely XRX026, and also for general corporate purposes, just keeping the lights on.
Is that good news, bad news?
Well, it's a bit of a double-edged sword. On one hand, it signals continued investor support, which is positive. Someone was willing to put more money in. But, as we discussed, it likely introduces some short-term dilution risk for existing shareholders because new shares were issued.
Right. Okay, what else?
A really crucial development, and generally a very positive sign, is their ongoing engagement with the FDA regarding that new drug application, the NDA, for XRLO, which is the brand name for XRX026. They had what's known as a Type B meeting with the FDA.
Type B meeting. What does that involve?
It's basically a scheduled formal discussion during drug development. Often focuses on a specific phase or a pending application. It's a chance for substantive back and forth. Following this meeting, XORTX outlined 5 specific next steps provided by the FDA. This positive interaction suggests the FDA is actively reviewing their data and giving them clear guidance. That's generally a very good signal for regulatory progress.
And they have a timeline for filing.
They do. They're targeting an NDA filing for the first half of 2026, so within the next year or so.
Okay, that's a key date to watch. Any other news?
Yes, they also recently secured that European patent we mentioned earlier, covering their specific xanthine oxidase inhibitor formulations. This helps enhance their perceived long-term value and potential commercial prospects outside just North America. It strengthens their overall IP position.
Good for international potential then. So looking ahead, what are the big catalysts?
The biggest one, by far, is that potential NDA submission, and crucially, its acceptance by the FDA for XRX026. That happening within the next few quarters is the pivotal milestone. It could drive really significant changes in the company's valuation, up or down. We should also keep an eye out for progression updates from their other pipeline assets, like XRX008 or XRX101. Any positive data emerging there could provide smaller, incremental catalysts. But, and it's important, but, even with that positive initial FDA engagement, regulatory delays are always possible. It's a complex, highly scrutinized process. That remains a key risk.
That brings up an interesting point about those regulatory milestones. It feels like a cliff edge sometimes for these companies, doesn't it? Have you seen examples where, a successful NDA filing just completely transforms a company, or where even a small delay really crushes investor sentiment? It seems like such a tightrope walk.
Oh, absolutely. The biotech industry is just littered with examples of both scenarios. A successful NDA submission, and especially the subsequent approval, can send a stock price absolutely soaring, sometimes by hundreds of %. It marks that transition from being purely an R&D hope to potentially becoming a commercial entity generating revenue.
And the downside?
The downside is just as dramatic. Even a seemingly minor delay, let alone an outright rejection from the FDA, can devastate investor confidence and crater the share price almost overnight. It pushes back the timeline to potential revenue, eats into the cash runway, and raises fundamental questions about the drug's viability or the company's ability to execute. It truly is often a binary outcome for many of these smaller firms. These regulatory milestones are absolutely the most significant events on their corporate calendar.
Binary is a good word for it. Okay, so wrapping things up, it sounds like XORTX Therapeutics presents as a high-risk, high-reward kind of opportunity, very typical, as you said, of microcap biotechs that are getting close to these key regulatory decision points. And the success of that lead candidate, XRX026 for gout, really seems to be the absolute linchpin for everything.
It really does. And if we connect this to the bigger picture for a moment, XORTX's entire valuation, its commercial future, it seems to hinge almost entirely on this single pivotal event, getting that successful regulatory approval for their lead gout drug. And this really raises an important, maybe provocative question for you, the listener, thinking about this type of investment. How do you personally weigh that kind of concentrated, almost binary risk? It either works spectacularly or fails dramatically against the potential upside of a breakthrough that could genuinely address unmet needs in a pretty significant market like gout or kidney disease. It forces you to deeply consider your own tolerance for risk versus that potential for groundbreaking but uncertain innovation.